Hey guys, welcome to my channel Success Sequence where we daily analyze Nifty and Bank Nifty's important move and expected level for the next day. So let us begin by saying today's analysis that from the past couple of videos I have been saying that market is in some sort of range like 10,180 to 10,074, and till the time we see a decisive break either on a higher side or on a lower side, we are not going to see any significant move. So now as you can see guys, the lower moving average, which is 89 days exponential moving average, has got broken today. Market are now trading below its 89 days exponential moving average. So if you see in the past, the market did came below its 89 days exponential moving average, but immediately got support, and we can see us go sort of up move which we did receive in the past. However, if you see the MACD levels, the previous support of the MACD level, which should have been there, is now not there because the current MACD level or the current values of MACD are below that. But there is a good support, like this support that I'm talking about is still there. So from this level, we can see a bounce back. So yet market is yet to break this particular level. So we can see an up move if the market holds on to this particular level. So today we are going to see a detailed analysis on a smaller time frame, or on a higher time frame like monthly, weekly, and also on a hourly and 30-minute chart, because since the market is trading at a very crucial level, so we need to analyze thoroughly and what sort of move we're supposed to get. So if you are with me on my WhatsApp broadcast, as we have created a market neutral position, so if the market goes any side, we will definitely going to end up making money till the time the volatility is there, and volatility gets expanded on either of the side. So that is okay. Now let us analyze the today's price action, and see what the market holds on a days to come, and let us try and analyze what a particular move or the levels that are going to act as a strong support and resistance for the market in the days to come. So let me tell you one thing, that today we did try to trade a particular move on a Nifty and a Bank Nifty on both the sides, considering the levels that I'm expecting that it should hold. So when the market, I what I suggested to my subscriber is that when the market trades near its support zone, which is 10,074, you should try and get into the market with the stop loss of around 10,060. So basically what we are trying to do is, by taking what you can do is, when the market trades near its crucial level and breaks below that and receives some sort of bounce back, you can enter into the market around support level, and if market stays there and goes up, you will get a good risk reward ratio. Having said that, when you see that when you try and enter to a market as support range, any fall below a short stop loss will give you a broad range to trade in the market. So that gives you a defined risk reward ratio that is very beneficial. However, let me admit that we did try, but since the market broke below our stop loss, which was about 10,060, so we did cover our position immediately. So I think there was around 14 points of loss today that occurred in this particular strategy. However, we need to try and take this kind of risk, because if the support would have holded, and it should have holded, because there was because we did have a triggers also, because MACD support was there, RSI support was also there. So if the market would have holded, we could have got a good gain with the good risk reward, I would say. So that is okay, but you need to understand and try and take this kind of risk when the risk reward is very favorable. So today the risk reward was pretty good, so that's the only reason we took this particular trade. However, since the level got broken on the lower side, we need to cover a position at a minimal loss. Now let us see the option activity range first, and then we'll try and understand how the moving averages are behaving, what are the technical indicators is suggesting, and if same sort of particular pattern has occurred in the past, and if that is the case, how the market has behaved, to just take a clue in the activity that market could resume to in the days to come. So let us start with the option activity range. What I can see is 10,500 to 9,800 are the broad range in which the maximum change in open interest, change in price, and actual open interest has occurred. So if you see the call chart data, I can see there is a good sort of call writing, especially uh, at a level of 10,100, 10,200, and 10,300. So since all these strike prices are on a higher side of the spot prices, it is suggesting that the market participants are not expecting a significant up move from this level. Rather, they are having expectation of stable to bearish kind of market, because this kind of aggressive position, or let me also mention that 10,400 is also seen a good amount of strike prices, followed by 10,500. So these kind of, you need to understand this kind of option chart data reading, because it's very crucial for your analysis. So uh, this kind of analysis suggests that either this position will get reversed very quickly if the market takes a U-turn and starts its upward journey, and in that case also we will see a good or a quick sort of up move. Or if the position gets a strength, the market will see a good decline, and probably the next logical target for the market comes at 9,800. I think, I know it's pretty scary, but if the market breaks its crucial support, you can expect that this sort of target to come. Now, call chart data suggests that the market participants are stable to bearish, no doubt about that. Now, sentimental, while like the change in open interest that has occurred at a particular strike price, like spot prices, is also suggesting that the market participants are quite aggressive and they are not expecting market to trade on a higher side. However, let me tell you that whenever you see down move, you tend to see generally this kind of position only. So we need to confirm this analysis with our other strategy or the system as well. Now, the scary part here is the put data. The put data suggests a good sort of bearish position getting created at a level of 9,800 to 10,100. So if you see, the 9,800 is also the 144 days exponential moving at the next Fibonacci moving average is also witnessing a good, I think, maximum change in open interest has occurred at this particular strike price only. So that is also something that we need to take in mind or bear in mind. However, if the market goes down, we're definitely going to make money, uh, because we have made a market neutral position. So 9,800 to 10,100 has seen a fresh creation of bearish position on a higher side. 10,150 to 10,500, what I can see, it's the put short is now started getting started covering. So when you cover a put short, you expect a stable to bearish market only. So uh, the call writing is not that much of worry, but fresh creation of bullish position, and that too with a significant amount. However, the change in open interest is not that much, but still, since the market is trading at its crucial level, this gives some sort of worry, because if the market declines from here, the next target, as I said, could be 9,800. Now let me also give you some sort of balancing view by analyzing our option chart, by analyzing the technical indicators also. So let me just squeeze a chart bit. As you can see, market in past, just a second, in the past did go down. So it broke below its 55 days exponential moving average. Then there is this sort of dodgy pattern. Then market did try to break above on a higher side, fall down, so which is suggesting a quite scary and a bearish position, because market failed quite significantly. And then you can see market did gave us a green signal, and then finally you could see a good, I mean, a very nice up move that has came. So what I am trying to suggest here is that this particular levels is suggesting that the market participants are expecting uh, good sort of support around the 89 days exponential moving average. So as you can see, the market came down gradually, because the you need to understand the market participant psychology, because the market participants were not so sure. That's the only reason market took time to break this particular moving average. So as you can see, the market did break. However, if you just see by visually, it's around 20% of the broad range in which the market now has came into. So there is a good chances of decline. But if you see any sort of green candle trying to break above 89 days exponential moving average, you should take it with the bullish or trend reversal pattern. There are also other reasons why I feel that there could be this kind of green candle emerging, because if you take the support and track it down to MACD, you can see there is a still some room for the MACD to decline, and there is a support here. So here you can see the MACD support is here. Further in the past, this support did also did hold. So 1 2 and the 3, now the MACD could come near this particular level and then could bounce back. So if the market or the MACD breaks this level, then only the worry will come for the 9,800 mark. Now that's not also the comforting part. The RSI also suggests that there is also one support left for the market to take, which is this level. As you can see here, the RSI support, and here the RSI support, and if you track down it to here, still the market is yet to break this line. So there is a hope that the market might hold on to this level and we can see a reversal happening. However, the CCI data suggests that the now at a 100 market is trying to go back into the negative zone. There is a slight sort of tilt. Volatility is going down, which is a good sign if the bullish sentiments are going to come. So that is also something that we should take in mind. Now let us try and take what the hourly chart is suggesting. So if you broadly see the hourly chart, what you will find is lower highs first thing, and the lower lows are getting formed. So if the market is likely to trade in this downward sloping channel, there is still an up move left. So if you have a very aggressive position, if you have made very aggressive position, I will suggest that if the market goes up, takes a U-turn sort of broadly, you may like to cover some sort of your position, especially if you have shorting position, because the market will remain quite unstable in the days to come due to election and various other issues. So that would be the only suggestion. But if you see now, the all the moving averages are trading on a downside, and the resistance will be now effective, and the market need to cross all this resistance to get onto the track of bullish move. However, this is an hourly chart, so we will not consider it that much. So here you can see there was a good sort of support which was also coinciding with the MACD. Now it has broken. Now there is one support here. So if you slightly expand it a bit, you can see there is some sort of support that is here kind of level. So 9998 sort of label that is getting emerging. So that is only the last support for the market to take, and if market takes support, you can expect some sort of rally to come. Now let us take a look at the weekly chart and see what the weekly chart is suggesting. A definitely bearish move. Here you can see a bearish move, test of 21 days exponential moving average. In the past, whenever there is a bearish crossover, market did took a support at a 21 days exponential moving average, then got up. Here you can see a bearish crossover, test of 13 days exponential moving average, and got up. In the past also you can see like that. So now uh, the risk will be high, because this is the twice the time the market is taking a support at a 21 days exponential moving average. So if this level gets broken, 9800 again becomes the next logical target for the market. And as you can see, the exponential RSI or weekly exponential RSI is also broken, but here you can see also a support gets tallied every time. Here you can also see a support is there, and MACD is yet to come in a negative zone. So that was also last sort of hope for the bulls if the market was to take any sort of support at a lower level. You can also see the support at RSI is also there on a weekly chart as well. Now finally, let us have a look at the monthly chart and see what the monthly chart is suggesting. So I know the video is getting quite longer, but guys, you need to analyze the market at a various time frame to get a hold of what the market participants are expecting, or what kind of move there is supposed to come. So let us see here. We can see a clear sort of divergence, clear sort of resistance at a high level. You can see there was a resistance, and the MACD has also given a bearish crossover. RSI is also trading below 68.10 mark. However, there is a support left. But we can see that the support is sort of broken. So next support will come if the yeah. So it's almost trading at a support line only. Now CCI is also uh, back below the crucial level, so this is also negative. Volatility is on increase, so monthly chart are not looking that good, and they are also suggesting sort of bearish move. However, you can see there is a support, because the 55 days exponential average is yet to get broken. So that is only the last hope that we can expect if at all market was to take some sort of move. Here you can see the exponential RSI is yet not broken, so that is the only hope for the bulls left. So we'll analyze the market on the opening. We see how the data is getting formed in the option front and future also, and then we can decide if we want to take a particular trade or not. However, we have already made a position, as I told you in the beginning of this video. So that's my analysis for the Nifty. I did mention the crucial level that you should look out for, and also the technical indicators and how they are behaving at a particular level. Also watch the hourly chart, because it will act as a very crucial level. So let us talk about Bank Nifty now. So Bank Nifty broad range 24,500 to 25,500, and as you can see, the uh, 55 days exponential moving average is now broken, and the next target for the market would be 24,690. However, there is a support, and this is the third time if the market comes and takes a support at a level of a 89 days exponential moving average. So one, twice, and the third time it will happen at this particular moment. Now let us check back. So let us see how the market is panning out as far as the option chart data is concerned. I can see a good call writing on a 24,800 and 24,900 level, and as we come to higher side like 25,500, the call writing is only getting aggressive, though that is clearly suggesting that the market participants are not expecting this sort of bullish move to come. They are expecting a stable to bearish kind of market, and now again the Bank Nifty will trade in this particular broad range 25,042 to 24,690, and till the time we are going to see any sort of break in this line, we are going to see a range bound market caught between these two levels. So we'll try and understand what are the chances of that this level getting broken in a bit, but let us check the put data first. So put data, as I can see, 24,500 to 24,800, I can see a fresh bearish position, so that is not good. 24,900 to 25,500, I can see a put short is getting covered, so that is also goes well with the bearish position. So kind of aggressive call writing that I am observing on option chart data. So and also supported by a put data with a fresh bearish position getting created at a lower level is sort of suggesting that the 89 days exponential moving average might get broken tomorrow. Now the MACD, as you can see, only last off, there is some sort of support for the market at a lower level. So if the MACD support uh, holds, then only we can see some sort of respite. Otherwise market can go down very much at a very lower level. Again, RSI level was also there, and the CCI is also just stalling at a high level. So let us check the hourly chart. So broadly I have already covered the technicalities of the analysis in my Nifty, so same applies to Bank Nifty as well. So as you can see, the hourly MACD has broken below on its uh, short term MACD, which is the 55 days exponential line is now getting broken, that too on a negative side, so that is extremely bearish. So expect a lower level, and the RSI now also facing resistance and a high level and getting down only. CCI is already in extreme negative zone, and the volatility is also taking support at this 55 days exponential line. So definitely Bank Nifty to me looks bearish. Now let us check the weekly chart. As you can see, bearish crossover, and the kind of bearish crossover, whenever happens, it comes to at least its 21 days exponential moving average. Here it's 24,570. So if at all market breaks 24,570 could be there, and if you see some sort of support at 24,570, as we did today, you can buy a lower kind of position at near support, have a 20 point stop loss, and then expect a high level, and the target would be uh, mm, this 13 days exponential moving average 24,800 kind of. So here you can also see on a weekly time frame, The MACD has broken its 55 days exponential line, trading below RSI exponential line, and CCI is also turning negative. Volatility is on increase. So Bank Nifty had not at all looking good to me. So uh, as I said, the market from all our analysis, what I feel is market can go down significantly if it breaks the crucial support level. But what I feel is the support are placed slightly lower. Expect a negative day for the tomorrow as well, and then only any sort of support that would eventually come or not. That's the whole topic to see in the next video. So I hope you guys must have learned something new from my video, and if you want to make me more of such videos on specific topics or specific talks stocks, you can mention that in my comment section, or if you have any doubt, comment or query, you can always mention that in the